Okay, so I want to talk about something. So this thing we are doing tonight, trading tonight, forex. What you guys need to know, actually, in the real sense, it's not forex. In the real sense, it's something called CFDs. So what you need to know is that CFD is a contract for difference. If you go to any broker outside the USA, you scroll down hadi chini kabisa ya website ama ya app, you will see that this is a CFD, contract for differences or derivatives, in that they are mirroring what's happening in the stock exchanges. Hiyo ni kama mtu aende aseme. Also, what you need to know, there's a difference between CFDs and futures, trading futures. So most of the time what happens in the US, CFDs are not regulated. So what's actually regulated is futures. So the people in Europe and the rest of the world, apart from the USA, most of the time we are trading contract for differences. Contract for differences ni they are usually given for shares, commodities, pairs, stock indices. Similar to, it's also similar to futures. Now what happens is, for contract for differences, is you are trading the value, or rather the difference in value of the open and close price of such of a commodity, an index fund, uh, what else, a forex pairs. So when you're talking about forex, now forex is foreign exchange. Forex is when you're trading euro USD. Forex is when you're trading the Mexican peso against the Turkish lira, something like that. Forex is currency pairs of countries, but whatever you are trading as a whole, it's not forex, it's called contract for differences. So in CFDs, you don't own the share. You are just given something that mirrors that. So ni kama upewe karatasi inakuonyesha, na pia uko mbele wako na karatasi ingine nakwambia, you buy this paper for, let's say, 100 shillings, and there's a similar paper there, but it's not the same paper in essence, but the value of this paper is made to mirror the value of the real paper there in front. And then you are told that if the value changes either in your direction or against you, this is what you are getting in return, or this is what we are taking away from you. Now that's what you need to understand. So ukiwa umebuy gold, ukiingia sahii MT5 ununue gold, haimaanishi uko na gold. Ukiingia MT5 ubuy silver, haimaanishi uko na silver. No, you are just been given numbers on your phone or on your screen to show you that you have it, but you essentially do not have that asset. That asset is not yours. The broker can close the broker can shut you down at any given time. And that's why when you look at the EU regulations, actually stipulated that all brokers have to show the percentage of their customers that are winning. So if you go to, let's say, FBS market and scroll down, you'll see that they're saying that 76% of their users are losing. What does that mean? 76% of the people don't know what they are doing. 76% of people are over trading. 76% of people are holding on to losers more, and they are adding to their losers and reducing their winners. So what does also that mean? If you want to trade to win, don't trade like the majority. Ingia kwa chart, ukiona chart, this price is falling. If you have a volume indicator, you'll see the volume does not support this movement. But what do the 76% of people do? They'll see a huge tick down, and then they'll be like, I want to write this down, I want to make a sniper entry here, or I want to write this up, I want to have a sniper entry. And then you're doing it probably for the adrenaline, you're doing it for the screenshots, and then you enter there. Once you enter there, the price just goes against your direction. Why? It's because you are trading like everybody else. You are having a hard mentality. Una trade tu kama kila mtu. Hard mentality is where you are moving with the crowd. If you want to make money, don't move with the crowd. I want you to try this for 1 week. Whatever you have been doing normally, how about this? You do the opposite. Even you yourself think about this. You have been trading for, let's say, what, a year, 2 years. You have been losing again and again and again and again and again, and then you are just funding the account and then blowing it. That's the definition of insanity. Doing the same thing except expecting different results. What about sit one day down and write down in your journal, or if you have been writing in your journal, go and look at everything you have been doing and do the same thing, but this time opposite. Where you want to enter a long position, enter a short position using the same reasons you have always been using. If you are whoever told you you buy support, this time go and sell support. If somebody tell you you buy resistance, this time go and sell resistance, and you see how many times that trade is going to go in your direction. And also, do not be greedy. If you want to be greedy, at least break even, move your stop loss to break even. You have to know that the best thing you want to do at the end of the day is not to lose. At least have your capital. Okay, I've taken too much.